Hello everyone, and welcome. Today, we are talking about your money and how to make it work for you. Many people hear the word stock market, and they get scared. They think it is only for the rich or the experts. That is not true. You can do this. You have the power to build your own financial future. Stock trading simply means you are buying a tiny piece of a company. When you buy a stock, you become a part owner. If that company does well, the value of your piece can go up. If it does poorly, the value can go down. It is that simple. You are investing in the future of businesses you believe in. So, what is the stock market? Do not let the fancy news reports fool you. It is not some mysterious place. Think of it like a giant supermarket. But instead of selling apples and bread, this market sells shares of companies. Companies like Apple, Amazon, or the local power company you pay every month need money to grow. They sell these small pieces called stocks to raise that money. The stock market is where buyers and sellers meet to trade these pieces. It is a place of opportunity, where everyday people like you and me can invest in the growth of the American and global economy. It is a place where wealth can be created, if you are smart and patient. The most important thing I can tell you is this: you must be ready. You cannot start trading stocks with money you need to pay your rent or your credit card bills. That is a mistake, a big one. Before you even think about buying a single stock, you must have your financial house in order. This means you have paid off all your high-interest debt. It means you have an emergency fund with at least 8 months of living expenses saved up. This is non-negotiable. Only invest money that you can afford to lose. This is not a game. This is your future, and you must protect it first. Do you hear me? Protect yourself first. The goal of investing is to build long-term wealth. It is not about getting rich quick. I see too many people trying to time the market, buying today and selling tomorrow. That is gambling, not investing. True investing is about buying quality companies and holding them for the long term, 5, 10, 20 years or more. You are giving your money time to grow. You are letting the power of compounding work its magic. This requires patience. It requires discipline. It requires you to believe in the process and not panic when the market goes down, because it will. This journey is a marathon, not a sprint. You have to be in it for the long haul to see real results. Alright, so you have your emergency fund. Your debt is under control. You are ready to take the next step. The first thing you need is a broker. A broker is a company that has permission to buy and sell stocks on your behalf. Think of them as your personal shopper for the stock market. There are many brokerage firms out there. You will see names like Fidelity, Charles Schwab, or Vanguard. You will also see newer app-based brokers like Robinhood or Webull. You need to choose one that feels right for you. Your job is to find a broker that is trustworthy and has low fees. Low fees are very important because fees eat away at your profits. Once you have chosen your broker, you need to open an account. This is just like opening a bank account. It is usually a simple online process. You will need to provide some personal information. This includes your name, address, date of birth, and your social security number. This is for legal and tax purposes, so do not be alarmed. They need to verify that you are who you say you are. The brokerage will ask you some questions about your income and your investing experience. Be honest. This helps them understand your financial situation and protect you. It is a standard procedure and usually only takes about 15 minutes to complete. After your account is approved, the next step is to put money into it. You cannot buy stocks with an empty account, right? This is called funding your account. You can usually do this with an electronic transfer from your bank account. It is simple and secure. Now, how much should you start with? You do not need thousands of dollars. Many people start with just a few hundred. The key is to start with an amount you are comfortable with. Remember our rule: only invest money you can afford to lose. Starting small is smart. It lets you learn the process without taking big risks. You can always add more money later as you become more confident. When you open your account, you will likely open what is called a cash account. This means you can only trade with the money you have deposited. This is the only type of account a beginner should have. You may see an option for a margin account. Stop right there. A margin account lets you borrow money from your broker to buy stocks. This is a big no-no for beginners. It is incredibly risky. If your stocks go down, you can lose more money than you even invested. You could end up in serious debt. You must promise me you will stick with a cash account. We are here to build wealth, not to gamble it away on borrowed money. Now that your account is ready, you need to know what you are buying. There are different types of stocks, but we will keep it simple. The main type you will see is common stock. When you buy a share of common stock, you own a piece of the company and you get voting rights. This means you can vote on important company decisions like who sits on the board of directors. The other main type is preferred stock. Preferred stockholders usually do not get voting rights, but they are first in line to get paid if the company pays dividends or if it goes out of business. For most beginners, focusing on common stocks of strong companies is the best path forward. So, how do you pick a stock? You do not just throw a dart at a list of names, you must do your homework. This is called research. Start with what you know. What companies do you use every day? Do you love your iPhone? Maybe look at Apple. Do you shop at Target all the time? Look at Target. This gives you a starting point. You already understand their business because you are a customer. You can see if their stores are busy. You can see if people love their products. This is basic research, and it is powerful. You are investing in businesses that you can see and understand in your own daily life. Once you have a few companies in mind, it is time to dig a little deeper. You do not need to be a financial genius to do this. Go to the company's website. Look for a section called Investor Relations. This is where they put information for people who own their stock. You can find their annual reports. These reports will tell you if the company is making money or losing money. Is their profit growing year after year? Do they have a lot of debt? You want to see a history of steady growth and smart financial management? Look for strong, stable companies that have been successful for a long time. Avoid the temptation of hot tips. Your brother-in-law or your friend at the gym might tell you about a stock that is guaranteed to go to the moon. Please ignore them. This is speculation, not investing. You must only invest based on your own research and your own understanding. A stock that goes up very fast can come down just as fast. These are often very risky, unproven companies. We are not looking for lottery tickets. We are looking for solid, dependable partners for our financial future. Stick to well-known companies with a proven track record. That is how you stay safe and build real, lasting wealth over time. Let's be very clear about something. All investing involves risk. There is no such thing as a guaranteed profit in the stock market. The value of your stocks can go down. A company can have a bad year. The entire economy can slow down. You must accept this reality before you invest a single dollar. The reward you are seeking, the potential for your money to grow, is the payment you get for taking on this risk. But you can be smart about it. You can manage that risk. The key is not to put all your eggs in one basket. This is called diversification, and it is your best friend as an investor. So, how do you make your first trade? You have done your research. You have picked a strong company you believe in. You have money in your account. Now you log into your brokerage account and place an order. You will see two basic types of orders, a market order and a limit order. A market order buys the stock immediately at the best available price. A limit order lets you set the maximum price you're willing to pay. For your first trade, a market order on a big stable company is perfectly fine. It is simple and gets the job done. Just type in the company's ticker symbol like AAPL for Apple and how many shares you want to buy, then click buy. Congratulations. You are now a stock owner, you are an investor. What do you do now? Nothing. That's right, nothing. Do not check the price every 5 minutes. Do not panic if it goes down a little bit the next day. Stock prices move up and down every single day. That is normal. You bought this company because you believe in its long-term future, remember? Your job now is to be patient and let the company do its work. Your plan should be to hold this stock for years, not days. This disciplined, long-term approach is what separates successful investors from panicked sellers. Your journey is just beginning. The most powerful investment you can ever make is in your own financial education. Keep learning, read books, watch the news, pay attention to the companies you have invested in. The more you know, the more confident you will become. Stay disciplined, keep saving, keep investing a little bit at a time, and always remember your long-term goals. You have the power to take control of your money. You have the strength to build a secure financial future for yourself and your family. Start today. Be strong, be smart, and be secure. You can do this.